Hey everyone, welcome to the Story Trading VIP Weekly Meetup. We got a special guest with us tonight, Matt Kolb, to present a new stock. Before we do that, I'm going to have to go through a couple of slides here. First, a quick disclaimer. Story Trading is not an investment advisor. That also goes for our presenters unless stated otherwise. Investing in securities involves significant risk of loss. If you're not familiar with Story Trading, head over to our website. You'll learn about our 4 pillars: fundamentals, catalysts, sentiment, and technicals. And you can sign up to become a VIP member and collaborate in our community. You can also sign up for a waitlist for an app that we're building. VIP picks, that's what we're presenting tonight. We'll be tracking the performance of this stock on a public spreadsheet, so you can check out our other VIP picks at storytrading.com. So the stock being presented tonight is ticker symbol SVVC. It's Firsthand Technology Value Fund. Last trade $3.63, market cap $25 million. Being presented by Matt Kolb, a new member to our community. Matt is very well-connected, has a lot of experience. He was really instrumental to a couple huge trades our community had in November and December when everything was crashing. We made some great money on SEAC, great entry, great exit. We made some great money on PTE, great entry, great exit. So we're going to see if this can be a hat trick for Matt with SVVC. First, quickly, here's a chart so you can get the big picture. This is a weekly chart going back many years. And what we try to do at Story Trading is understand and collect all this data on the 4 pillars, which is sentiment, fundamentals, catalysts, and technicals. So we work as a group, we collaborate together, so we get an understanding of why stocks are priced where they are, which allows us to make better trade and investment decisions. So with that, Matt, I'm going to turn it over to you, and you can give us your pitch on SVVC.
All right. A little background that you don't know about me is I used to be the closed-end fund specialist. I ran institutional sales of a company called ING Investment Management. We launched a bunch of closed-end funds into the marketplace. And for people that aren't familiar with closed-end funds, they're basically like ETFs, but they can go at big discounts or big premiums to net asset value. And usually it only go to a premium if you're invested in an asset class that's pretty rare. Or it has a big, huge distribution yield, like a 10, 15% distribution yield that it's paying out via an option strategy or something that's very eclectic using margin, or leverage is what they call it over there instead of margin. And so as a specialist, I looked at hundreds of these different opportunities, these funds, and the biggest discounts you'd ever see were 25, 30% to the net asset value. And what does that mean? If you were to liquidate the assets, you could get 30% premium just by liquidating the assets. Okay. And so I came across this a few years ago, and it just got interesting to me again because the discount has gone to a historical, from my understanding, high. Right now, they just came out with the latest press release, and you guys could all pull that up by just putting in the ticker SVVC, and it'll list their holdings. It'll list their top 5 holdings, which is around 95% of the total funds. They have 11 positions, so 11 securities. 5 of them represent 95%. Why I'm really horny about this, okay?
All right.
And sorry, I don't need to, I like to get a little crazy in my pitches. Sounds one good. Position in their portfolio has a higher market cap than their entire market cap of SVVC. So what does that mean? If you look at Revasum, yeah, so pull it up. Their last thing is, you'll see the top 5. So Revasum right there, I did the calculation today, just based off of the last share price, not even using this data because the stock has gone down a little bit. But in my opinion, it's one of the most undervalued semi-cap stocks out there. And I know you have another guy we could bring on about semi-caps. If he could look into Revasum, he's going to be very intrigued on Revasum because they're in the hottest area, silicon carbide.
Oh, I don't know. Really?
Yep.
Oh, you just piqued my interest too, because that's what got air on its 1,000% run a few months ago.
I know that. I was waiting to tell you that until this presentation.
All right.
So Revasum makes the tooling to actually create the silicon carbide technology, and they launched. They haven't announced the customer, but about 5 months ago, it was one of the largest European players. So my guess is it's STM. They're huge in it, right? I know they're trying to work with Wolfspeed. They're trying to work with all the big players there. Their revenue for Revasum, they did 13 million year ending September 30th. 2021, and next year they're predicting to do 25 to 35. So revenue growth has gone from 13 million to 25 30. I haven't run the numbers, but at the midpoint it's over 125% year over year, yet the stock is not even close to all-time highs. I mean, this thing is only at 92 cents, trading at around, I think, 2 times EV to sales. They're 2000, like all of their supply is already booked out, like, but 23, like they just got a big loan, not a loan. They didn't want to raise capital because they know their stock is so cheap. Like I spoke with SVVC, they think the stock is dirt cheap too. So they're not going to do a secondary for this growth capital. So they just borrowed $8 million at a 9% interest rate. I think it was, you'll have to look, and then gave the guys some warrants. So that was just out there, and the stock was up big today, even though tech was down because of that, because of how strong the growth.
Wait. Which stock was up big?
Revasum.
Oh, Revasum.
They trade over in Australia. You can track them.
Oh, and they were open today. I got you. Okay.
Yeah, pull up RVS AX. RVS.
Sorry, I lied to you. I said I wasn't going to interrupt you, but this just got really, really interesting, man.
RVS. Yep, that's it. Well, it's down today because it just opened and then Russia, but it was earlier up that 6 cents. So,
okay.
but I did the calculation based off of the shares that SVVC owns times the share price, and then I did the conversion back to dollars. It was $31 million just for Revasum alone.
Wow.
Okay, and Revasum at 86 cents is dirt cheap. I mean, I think they're going to get acquired this year.
Wow, Matt, I had no idea. I thought all their portfolio was private companies.
No,
this is amazing.
They have 2 of their 5 are well, they have 11.
There it is.
2 of their 11 are public. And they are so bullish on Revasum's future. Like I said, they're going to do 30 million in sales, trading at a 70 million market cap with I think about 6 million so it's trades about 2 times EV to sales, which is very cheap for a company growing 120% year over year. And fully booked out for 22. They would do way more in sales in 22. They just can't, they can't make it fast enough. So there's actually the other public company, I believe they're going to, they started liquidating, and what they can do with that, which is really cool, which is what I have been recommending. Well, other investors have recommended that the company should liquidate their Pivotal or try to get Wrightspeed acquired. And we can talk about Wrightspeed next, but let's say they liquidate their 14 million Pivotal shares. What people are saying is they should buy back stock, because from the latest press release that you pulled up, the latest net asset value, I think, was 1430, 1450. I don't know. It's in the 14s. Okay. And the stock is trading at 360. So you could liquidate. Okay.
Can I stop you there just for those who are unfamiliar? How is this 1450 net asset value calculated? Where's that coming from?
So the 2 public securities are valued as of the last day, as of January 31st. And then I'll have to go to my notes. IR told me. Our top 3 private companies are valued using various methods depending on their individual situation. In the case of Intra-Op, valuation is based on revenue multiples of comparable public companies. For Wrightspeed and Harris Systems, valuation is based on prior transactions in each company's stock.
So what's the net asset value of just the 2 publicly traded ones? Do you know that?
Oh, I think it's like $5.50, $6.
And the stock is trading at, what did I tell you?
360.
360. Okay.
Here's something even better. They have $33 million in NOLs. So the whole market cap is 25 million bucks.
All right, Matt, I'm going to stop you. I'm sorry. I can't wait till the end. Why do you think there's a disconnect between the 360?
I know for a fact. Okay, so the management team has been very hostile to activists and other people that have tried to get them to do stuff because they're collecting a nice, 2% fee on the assets, and they're not really doing much. I mean, obviously they're doing some stuff behind the scenes, but they're not running the companies. They're probably helping them raise capital, which they have. They keep investing in Wrightspeed. Anytime they've had additional capital, they're giving Wrightspeed additional capital to build out their EV platform. And so it's the management fees and the fact that they do have a 2 and a well, they haven't made the NAV hasn't gone up, so they're not taking any performance fees for a while. But let's say that the NAV does go to 30 or 40 bucks, they would get 20% of the upside, right? But there are losses, so it's not cut and dry.
So they get a 2% asset management fee, but wow, Wrightspeed, which you didn't really talk about, that's EV. So they got Revasum.
Powertrains. So hey, not only that, the founder of Wrightspeed, it was one of the founders of Tesla.
Okay, so Wrightspeed is in the electric vehicle powertrain sector.
Correct.
For heavy duty commercial vehicles. So that's like for trucks.
Yeah, so that would be like, okay, so here's the problem. Because of Nikola and Hyliion, the truck, even though they have an amazing technology, there's like this negative connotation to heavy duty trucks, but that will be a play. And what the market is waiting on Wrightspeed is some new customers. And it sounds to me that they got some really interesting customers and some good things going on, over the next couple periods. So as new customers gets announced to Wrightspeed, there's going to be more hype. They're retooling their deck right now. They're going, they're going to go out there and as I think, and I don't have the exact numbers, and he couldn't disclose this for me, but the last round that I saw on Crunchbase, I think it was like $160 million with valuation, 170. That was 2 years ago. Okay. 2019. So actually 3 years ago. A lot has happened in EVs in the last 3 years.
And they own 23% of this company.
Oh, I think it's a lot. They won't disclose it to me. They just won't. But it's at least 25%. Could be up to 50. Like they don't have to disclose because it's a private company. But,
so I'm looking at on the press release Friday. Maybe.
Well, no. What you're seeing is it's of the assets. So what they're saying. Okay, so here's how we can run the numbers. We can run that percentage as of the end. So I never even thought to think about this. So you could run the percentage as a function of the net asset value. And then calculate how much that is versus what they raised in the last round to kind of get a rough number. And I could do that later and come back. But they're because the management told me with respect to Wrightspeed, the current future strength of the segment does not play into the valuation unless there's a tangible indication of value that's taken the market into account. So until they raise another round of capital, even though they're valuing it based off of 3 years ago's valuation, right? So let's say I help raise them 10 or $15 million. Let's say I go to a VC firm, we're going to give you 15, it's going to be at a 500 million valuation. At that point, NAV would skyrocket, right? But since they haven't had a funding round in those 3 years, is the reason why they have to value it at historical value, where for intra-op, they're doing it at comparable revenues is what they told me.
Okay. And I'm just looking at Pivotal again. I pulled up their website here. So Pivotal is the other publicly traded company. They're also in the semiconductor industry. Can you tell us a little bit more about? Yeah, what do they do?
It's flow, gas flow. So I can't remember the other companies. They'd be selling the technology to Lam and the other big boys out there. But the thing is, I'm not as interested in that because they've been liquidating their share, and a lot of big investors. And this is the catalyst, right? Let's say they reduce it, and then they decide instead of reinvesting in their companies or other investments, they want to issue a nice dividend, right? If they put out $1 dividend on a 350 stock, you know what I'm saying? It's gonna be a fun day in the marketplace. Or if they start buying back the stock, right? The CEO, Kevin Landis, he obviously owns 700,000 shares. he wants it at 14. He's going to want it at $14 too. So my guess is once they release the 10K, they're going to either buy back stock or have insiders go in there and purchase stock. And that should be announced, fairly quickly, because they have till, my guess is like mid-March to get that done. But, my guess is it'll get announced fairly quickly because, they you know what? They don't have to file quickly. So they probably will wait till like March 15th to announce that. But after that, then they'd be able to buy back stock. There's only 6.8 million shares outstanding, right? 6.8 million shares outstanding. And can I post a video?
Sure.
I'm going to do that right now. How do I do that?
You can I just enabled screen share.
Hit in the chat button.
You can share your screen, or you can send it in chat, and I'll put it up on my screen.
Let's put in the chat.
Okay.
I just do that. It's easier for me since I'm looking at 5 different things. It's just hard for me.
All right. Very good.
I don't have I'm just on my laptop right now. But so I just shared this. This is a video.
How long is the video? Do we have time to play it?
Yeah, let's play it. It's great.
All right.
It's like, I think 6 or 7 minutes. It's the CEO of Wrightspeed. Okay. And this is the Bloomberg. You know what I'm saying? So this was done in December. Okay. And as you guys know, is EVs is the only, is hotter than silicon carbide.
All right.
Well, silicon carbide is involved.
Does your house have windows and?
Sorry, just going through the ads here.
Cut.
Got 6 more seconds.
All right, no problem.
All right. All right, here we go.
I haven't listened to this in a while, so it'll be good.
Heavy vehicles like pickup trucks or short-haul delivery trucks, buses, contribute a lot of carbon pollution. Lots of progress has been made on cutting auto pollution and, of course, on electric vehicles, but there's been slower gains on these heavier vehicles. We're joined now by Gilbert Passin. He's CEO of a company called Wrightspeed, and they are involved in electrifying, in particular, short-haul trucks. Tell us what you're doing here, because this is a major problem, isn't it? Trucks, it's been a much slower process cleaning up their emissions.
Yeah, first of all, good morning, Andrew. I'm very pleased to be here. Absolutely true. There is a huge growth potential and, let's say, solution potential for commercial vehicle. Just as a data point, I see commercial vehicles only represent 4% of the total vehicle population, but yet produce almost 30% on the on-road emission and burn about 26% of the fuel consumption.
Wow.
So definitely this is a great target area for companies like ours, where we can provide great solution to make these dirty vehicles, so to speak, cleaner and more efficient in terms of energy.
You have such a distinguished career yourself. You got a degree in robotics and automation in Paris, and then you went to the University of Bath. You got a Doctor of Engineering, and then you were with Tesla, you were with Toyota. So what brought you over to Wrightspeed? Why were you excited?
Well, first of all, I've had a unique career because I had the chance to not only work on passenger cars, starting at Renault and also Toyota and Tesla, but also working with heavier vehicles with Mack trucks and Volvo trucks. Mm-hmm. And so my career has been oscillating between the two. And both of these worlds are very exciting in different ways. And so I think there's a huge amount to achieve in commercial vehicles. I have done a lot in passenger vehicles. My last endeavor was with Tesla. And I thought it was the right time. And he and Wright reached out to me at the time to focus on commercial vehicles. So that's really an exciting world.
So I know we can't get into it all, but so you're essentially, one of your things is extending the range of electric vehicles. So how does your technology do that?
So basically, we offer two fundamental technologies. One is a full battery EV, similar to a passenger car, where we have an electric axle of our own design with a very specific gearbox system that allows to regen the electricity very efficiently at low speed. We also design our own battery system with specific chemistries that are very safe and very durable. And then the overall software system that goes along with that and interact with the vehicle. We also are unique in offering what we call a range extended. I prefer to call it onboard charger solution, which is essentially from those very heavy applications where full battery electric does not suffice. And so an example of that would be perhaps refuse vehicles. If you think about New York City, for example, or even Toronto, I'm sure I live there. So, you know, in the winter, you need snow plows, you need power takeoff, you need a lot of energy and power, and you need the ability to provide that to the vehicle for the entire day.
Can you tell us any of your customers who has signed up?
So right now, behind me, actually, on the picture, you can see we have a municipality in the Middle East, and we're working actively on bus conversions for them. This is our current project. In parallel with this, we are engaging with refuse companies, commuter coach companies. Some of them are in the Bay Area, as well as we announced recently a partnership with Matthews Specialty Vehicle in North Carolina to focus on more like delivery box trucks or specialty trucks that are also very much in need of improvement. And maybe even school buses.
Yeah, that's a big push now, get electric school buses, because the kids are exposed to diesel fumes when they're in the buses. So we're so tight for time, and I'm sorry. How does it work then? Do you acquire the buses or vehicles, trucks, and then you apply your technology?
So the business model we have is basically we do not make the full vehicle. We are focusing on the heart of the vehicle, which is the powertrain. So what we do is we design the appropriate. We are the only company that actually can do a full design system with our own design to solve a true customer problem. And then we design the powertrain, we produce the powertrain with our supplier network, and then we deliver them as a kit to various points. It could be to an OEM, if it's a fresh truck, for example, we could be like a tier 1 supplier to them, or it could be a big fleet. A lot of these big fleets that have thousands of vehicles have areas where maintenance areas where we can actually outfit or retrofit the trucks or the buses according with our kits. And of course, we assist the customer in doing so, make sure that we have the full knowledge of our system and provide warranty over time on our powertrain.
Just as I say, you qualified in robotics and automation. What about self-driving cars, self-driving trucks? I got to ask you that. Are they coming on the roads in the next few years?
Actually, it's funny you're asking, because I was just talking to a company, I won't say who, that is focusing on autonomous commercial trucks. And so we are actively engaging with them. So electrification enables this kind of advanced autonomous driving, right? And it's coming. I mean, especially on routes, like if you think about delivery routes, like for big chains, you can imagine that it's easier actually to have an autonomous vehicle on a designated route than it is perhaps in the city of San Francisco or Toronto. And so this is a kind of thing that is coming.
Let me ask you, Gilbert, do you own an electric car yourself? Or if not, can I ask you what you own?
Of course, I own a Tesla. I mean, I basically helped launch the Model S, so I own the Model S, and it's working very well, by the way. So, but I know there are very exciting other electric cars coming on the market right now. So,
what about France? Any French companies or any electric cars going to be made in France?
Oh, of course. I mean, France has been pretty active, and I think President Macron is pushing really hard to have a French kind of industry network around EV. Sure. Some of my former colleagues are developing some of that in France, I know.
Gilbert, thank you very much indeed.
All right.
So you can see, I mean, Bloomberg's not going to bring on a company that's, fly by night. That, they've done their work. This is late December. I spoke with the company. They're going to make some announcements at some point. With new customer acquisitions. My guess is when, it's going to take a while to raise another round of funding, right? You don't want to do it in this insane market anyway, but when they do, the NAV will go up precipitously. And then you will be able to, let's say it goes from 14 to 20 bucks or $18, right? I mean, ARBs will come in, right? And so that's what I'm hoping, a buyback. Some extraction of value. Like, I like to buy things at a fraction of what they're worth, especially in this market where, in my opinion, right? I mean, there's a lot of downside protection when you're buying this at 350 when you can liquidate it at 1450. At some point, an activist is going to come to play, right? And I did send that, and I'll send this to you guys as well. Oh shoot. 1 second. All right, I'm pulling it back up. How do I get that? Cool. All right, so I'm gonna share this too. This was by a recent activist. So things that I'm doing on the side is I'm talking with other people that like to get involved in these unloved, out of favor places, and I'm bringing the story to them as well. And I mean, in an ideal world, yeah, an activist will come in, we'll work with the company, get them to do something. You know, I mean, at some point, people are gonna get frustrated enough to potentially, you know, do something to get the board out. I hope, I mean, like I said, I don't know the guy that owns it. He owns 700,000 shares, but I do work with their head of IR. I really like him. I hope they'll be able to get something done. And so this is an activist. I just sent this in. You know, they're upset and they have every reason to be upset, right? But if they come in and they've done this before.
And activists just filed this? When did this happen? When?
About a month ago or 3 weeks ago.
Oh, wow. Wow. I'm surprised the stock hasn't done better since this has been filed.
Yeah, I mean, it's just a function of illiquidity and it trades nothing, right? I mean, it's if you get some. So here's the thing: there's no sellers, there's no buyers. You knock out some shares, and you know, any good news if they announce a buyback or insider buy or you know any type of catalyst on any of their positions, right? Let's say, I mean, if Revasum gets acquired or a big customer, you know, they start working with you know any of the other big SIC players outside of the big European one. I mean, this is there's all kinds of like. Here's the thing: I could sleep at night knowing I'm going to buy this at 360, and my cost basis is 390 something. So I mean, and I have a ton of shares. I mean, I am loaded up to the gills in this, and I'm okay. I'm willing to hold this for a while to see how this plays out because I'm comfortable with the holdings. They have a huge net operating loss of $32 million that they have to use up by 2025. So as gains, they're not paying taxes. So, you know, let's say Revasum does get acquired. They're not gonna pay any taxes. It's gonna go right to the bottom line, NAV. And then, you know, I mean, if enough shares gets taken out, there's only 7 million shares. If enough shares, like I was talking to my buddy the other day, he goes, I'm not selling any of these. I've owned these things for years. The only thing I'm gonna do is average in. If the right financial advisor community, so a lot of FAs don't buy individual stocks, but they do buy funds like this, right? So they'll go in there and they'll allocate, you know, $500,000, $1 million to all the client portfolios, get enough FAs to come in there and knock it out. There's not gonna be any shares. So any good news is gonna really rocket it up. Or if they say, hey, we're gonna tender, you know, 1 million shares at $7. You know, they did that in 2019. I think it was like 800,000 shares at $7. So you know, so that's a way I could double my money. And everything for me is about, you know, getting involved in something with a catalyst and minimizing my risk.
So yeah, I think this filing is probably going to be good homework for everyone here to take a look at, probably get a good sense of why the stock is so much lower than NAV. We'll do that offline, but you know, you had mentioned that people aren't happy with management, that they're sitting pretty with a 2% management fee. Can you kind of summarize, like, what are some of the other issues that maybe were in that filing? Because the price difference, you know, between the 350 and NAV
it's the
huge.
illiquidity. It's the fact that it's not a diversified fund, right? There's 5 positions and 3 of them, 3 of the top 5 are private and the other 8 are private. So it's like the valuations, you know, the liquidity of selling those positions.
I see.
But you know, I have history in venture capital. So
okay.
I mean, 2 and 20 is pretty normal, right? It's just a publicly traded VC firm. I mean, like I said, I mean, I'm involved with the VC firm that I help out, and they charge 2 and 20. I mean,
I got it. So it's the illiquidity. That's why you see the price difference between the NAV and the market price. That makes sense. But how come it's not trading closer to 5 or 550, which is the value of the 2 publicly traded companies?
Well, because they're not selling them, right? And then there's fees. So the NAV would inherently go down if the NAV doesn't go up, charging 2%. So
Okay.
I mean, it's not going to, it would take a long time for the fees, if they're not doing anything in the portfolio.
Okay.
But then again, right? I mean, you look at stocks trading at 100 times, sales. This is trading at a fraction of assets, right? I mean, there's no assets in these 100 times sales companies. So, I mean, a value, like, especially in this type of market, value is going to come to the forefront.
Got it.
And especially with a company like Revasum with game-changing technology. And like I said, I'm hammering them on doing something, right? On doing a buyback, doing a tender
How much
offer.
cash? How much cash do they have on hand that they could use in a buyback?
Well, they don't. They could sell Pivotal and do that, right?
I see.
So that's been my sell Pivotal, and then you do a buyback or issue a big dividend. That's what other investors want them to do as well. But then again, they also could invest in Wrightspeed, right? And then if they think Wrightspeed is a 10x from here, I mean, it all depends on where they feel the best use of capital is.
Got it.
I mean, but there's not going to be many opportunities, right, to get doubles and triples out there, right? I mean, I think the times of stocks mooning and and memeing are few and far between. So now
Right.
it's a stock pickers market, and you need to find the trends, right? They two of their 5 positions are in very hot areas. You got
Right.
electric vehicles and SIC.
Yeah. Yeah, absolutely. So yeah, you mentioned that they could use PVS as a source of capital and liquidity. Why? I'm trying to understand, why is it then you've indicated they already sold some of those shares. So why would that be the source of capital and not RVS? Are they more bullish on the silicon carbide there?
RVS, they're extremely bullish on, right?
Mhm.
I mean, sales, like I mentioned, it was 13 million ending September 30th to predicted 25 to 35 million. And I think it would be higher. It's just a function of being able to build out capacity to get that done. And so that, I mean, if they're trading at a 60-something million market cap right now, growing at 120%, and sales goes from 25 to 35, ending September 30th next year to 60, right? It's not going to be trading at 90 cents. I promise you that. Especially since here's the great thing. They own 46 million of, I think, the 100 million or something outstanding. So, like if they wanted the company sold, they could get it sold because they almost own 50%.
Wow.
So, I mean, the liquidity, like even though they don't have liquidity in their own stock, and then Revasum doesn't have the liquidity, so any good news will rip it as well. So I'm just hoping that they announce, and it sounds like they have some big clients that they could potentially announce, which will be catalysts for Revasum.
Great. Have you noticed historically, does the stock trade very closely with the public values of Revasum and Pivotal?
No, I mean, well, they haven't been public that long. I think only the last couple of years. But I mean, historically, this fund is traded at a big discount to net asset value. But for me, I can't remember a time it's been. I mean, at 360, it's a 300% return to NAV, and I personally believe with their holdings, the NAV is closer to 18 to 20 bucks. Based off of how they're valuing Wrightspeed, Introp, and their other private companies.
Okay. Well, I promised you some tough questions. So I have one tough question for you, then we'll open it up to, if anyone has any questions, it's a good time to throw it in chat or raise your hand. So my question for you is the valuation of these private companies that go into this NAV with what we've been seeing the last few months with growth companies and non-profitable companies because of concerns of higher interest rates. Is that a concern to you? Because I look at that and I'm like, I don't know, maybe you can completely write off all of the private companies. Who knows? Maybe they're all going to be bankrupt in a year or two. You have any concern about that?
That's definitely a risk. But then again, I mentioned earlier, they're valuing not based off of current what's going on in the market, 2019 valuations, right? So, I mean, they never raised their valuation when everybody else did, right? So it was their marks for 2 of the 3 private companies outside of Introp, Wrightspeed included, was based off of the last funding rounds. So it was back in 2019. So a lot has happened in 3 years. So that's why I think the marks are pretty conservative. An intra-op is it's they're constantly looking at it, and if the revenues of public companies have gone down, they're going to reevaluate it. So it's I think these marks are pretty conservative. They never did, like, I mean, yeah, if they would have marked it like all other EVs and it was like crazy, then I would say, yeah, that's be a huge risk. But since they never did that, I'm not worried. Like that, I even said that even prior to that question, I think the marks are too low.
Really, even after this big correction in risk
Yeah,
assets?
because it's still based off of 2019 marks. So we have seen appreciation in those 3 years.
Right.
Even at current,
And do you know offhand that the financial situation, that the balance sheet at Wrightspeed, how much cash they have, what they need to raise? You know anything about that?
No, I mean, they don't. That's the problem with private companies is
Right.
they don't have to disclose.
Right.
I mean, I brought it up to them, like, if they'd be interested. They are looking, right, for the right opportunity. My guess is they're waiting for some catalysts and some other things.
Right.
So yeah, I think it's like I said, the good news, as long as they're well funded, right, and they don't have to answer to public shareholders. They can do what's best for the company. That's what's much better about a private company versus a public company. There's all kinds of extra fees that a public company has to go through, and I mean, so as a private company, they're going to do what's best. They're not going to make any, have to listen to a bunch of shareholders. Right now, they're listening to their major shareholder, SVVC. And they're going to do what's best for the company long term.
Okay, great. I'm curious. I want to pick your brain just a little bit about higher oil prices. I haven't seen much chatter on social media or even in our community about, could that be like a tailwind for the EV sector? I'm thinking it could be, right? I haven't heard anyone talk about it. I haven't looked at how Tesla, I mean, I did. Tesla's down big, but
then again, you got Tesla's down big, but they were trading in the stratosphere. I mean,
right.
I mean, a company like Wrightspeed versus them, probably trades at 1 times, okay, or 2 times. I have no idea, because we don't know what the revenue numbers are, and we don't know, what the latest valuation is. But Tesla was trading at a crazy multiple. But yeah, in the end, as oil prices go up, you're going to see a tailwind on the EV sector.
Yep, that's what I'm thinking. And that helps silicon carbide as well.
I just read a report that only 3% of all cars were EVs last year, and as prices go up, EVs are going to be more of a function. There was like an 8% number, but there was 3%. But still, it's still such a low amount of total car consumption.
Yeah, that's going to be really interesting. Even in an environment of higher inflation and maybe a recession, if you have $90, $95 oil, or wherever it is, elevated oil, that's still going to be a tailwind for EV growth. So it can maybe, even in a bad situation, balance each other out.
Yeah, I mean, then again, just like it could be a major customer for Revasum or Wrightspeed. Let's say Wrightspeed comes in there and gets the post office, or that's the catalyst, and then they can raise capital from. It's I mean, they said they were working with the Middle East and a bunch of other clients.
Yeah, and that's something I do like about Wrightspeed, is because a lot of their clients could be government and municipalities and things like that, which we know that they have, a lot of them are making mandates to go green.
Exactly, especially with Biden, right? And so it's a function. And I mean, for me, if this was trading close to NAV, I won't even touch this. To me, it's more about the ARB opportunity, and like, what are they going to take it down to? $2, $2.50? If they do that, I mean, I guess it's possible. But anything's possible. But eventually, a value or an activist. So if I was an activist and I could go in there and buy as many shares as I can at $2, I mean, at some point they're going to do something. They're going to push them out. Like, there'll be enough shareholders pissed off, including me. This thing goes down to $2. I mean, I own more than 1% of the stock. All right. I mean, I have a lot of other friends involved. I mean, I could buy a bunch more than 1% of it. So don't tempt me.
All right. Sounds good. Last chance if anyone has any questions. If you don't, we can continue collaborating online here. We have a WhatsApp group we just opened for VIP members at the SVVC research group. So really looking forward to continuing to collaborate with you, Matt, over in that WhatsApp group. You can check out our upcoming VIP events over on our website. I think our next one's this Wednesday, 4:30 p.m. We'll be doing an open session on Zoom to discuss any topic. If you're not part of StoryTrading, also you can go follow us on YouTube and Twitter.